What's up, traders? So today I'm going to tell you about an opportunity that may come up here very shortly now that we've had a nice little market downturn. And I'm going to show you how exactly I would play it using leaps. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in multiple six figures a year from the stock market. And I use the money I make from the stock market in order to provide for my entire family. Now, I know you've noticed the stock market going down over the last few weeks. And I know that the size of the drops have been scaring people. But I do want to assure you that these downturns are what makes the most millionaires. And I know it's a hard concept to grasp because us as humans, we're geared to run away from danger. Well, most of us. Some of y'all are a little different. But no, so when we see the stock market go red, a lot of people naturally think sell, go away, get away, and run from the danger. But in this scenario, you should run towards the danger. All right, and everybody knows the famous Warren Buffett saying, be greedy when others are fearful, be fearful when others are greedy. However, when it's time to be greedy, most people are not, which is unfortunate because time and time again, it shows that the people who are greedy during fearful times are those who end up becoming millionaires from the stock market. And one thing you should always know is the sentiment will always follow the stock price, and it will never be the other way around. And what do I mean by that? It's very simple. When a stock price is continuously going down, the media and people will have nothing but bad things to say about that company. And then on the flip side, when a stock price is going up, the media and people will have nothing but good things to say about the company. So the sentiment always follows the stock price and it is never the other way around. And let me give you a quick example of that and show you a time where I was very greedy when others were very fearful. All right, so here we have Meta's chart pulled up and I have it set to the monthly candlesticks. And if you've been in the stock market for a few years, you know that 2022 was a pretty bad year for the entire market. And not only was it a bad year for the market, it was a really, really bad year for Meta. So we can see starting, September 2021, it started going down. It was hit a high of $384 and it tanked all the way down to a low of, $88 in November of 2022. All right, so it went from $384 to $88 in the span of about a year. So it lost almost 75% of its value. Now, during this time, because the stock price was continuously falling, the media kept reporting bad things about Meta every single day. And during that year, it was normally stories like, oh, TikTok's going to take over Facebook and Instagram. Nobody's on Facebook anymore. Mark Zuckerberg doesn't know how to run the company. He's wasting their money. And it was constant bad story after bad story after bad story. But however, I looked at the fundamentals and I listened to their earnings calls and I was like, every single earnings, their revenue, their net income, their free cash flow is all going this way, but the stock price is continuously going this way. And the stock was already at what I considered to be a good value. So I thought to myself, there's something not right about this. So I started buying the stock when it hit around $200. So let's see, that would probably have been around March of 2022. And I continuously dollar cost average all the way down to $100. Okay, so I kept dollar cost averaging every single month because it continuously kept going down. And then it bottomed out at $88. And then from November of 2022 to now, it's been consistently going up every single quarter. And now the price is currently at $650 and it got as high as, $740 just last month. Now that's just one example of when I was greedy when others are fearful. But most people want to buy up here when everybody's being greedy. But when everybody's being fearful is what makes millionaires in the stock market. But let's go ahead and get into the video. Make sure you like the video first off and subscribe to the channel. And do remember that I am not a financial advisor and this is not financial advice. All trading comes with risks. I'm just showing you how I built wealth over time. Now, if you're new to options, let me first off answer the question, well, what are leaps? Well, leaps are long-term options with expiration dates, usually 1 year or more in the future. They offer the same rights as long calls, but with a longer time frame. And so leaps are very similar to owning a stock, but with much lower capital allocation. All right, so typically you could buy a leap for about a third to half of what it would cost you to buy 100 shares of a company. And so that is the power in the leap is you're able to use leverage to buy 100 shares of a stock instead of just buying it outright. And so here I have ticker symbol SPY. And SPY is just an ETF that follows the S&P 500. But you can see that over the last few weeks, it's been pretty nasty, pretty red, and everybody's been selling off because headlines just keep coming out about the tariffs. But one thing that I do know is after looking at the earnings call of most of our large companies, our US companies for the most part are doing great and are continuing to see growth. So not only do I think that we will see a reversal within this trend sometime soon, but let me show you this video from CNBC where investor Tom Lee gives his thoughts as well.
Q2, I'll take Q2.
It's one thing for CEOs to be a little skittish, be a little more cautious. That's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
I mean, yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near because if the economy's near stall speed, I think people realize the Trump put does come back because otherwise it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.
Now, what are the data points that I look at when I'm considering purchasing a leap? Now, the first thing is first. Typically during times like this, I prefer to buy leaps on ETFs that follow the entire market, such as SPY or even QQQ. Because although we don't know the future for individual stocks, one thing you can bet on is that the market will go up over long periods of time. All right, so we have ticker symbol SPY, which follows the S&P 500, which is the 500 largest companies that are publicly traded in the United States. And the first data point that I look at is the stochastic. So the stochastic is down here, but the stochastic just aims to show you in what direction is momentum taking the stock. And now we can currently see that the stochastic is pointing downwards. However, now it has entered into an oversold area. And typically when you enter into an oversold area, that generally means you can expect a reversal at some time soon. And so what I would be waiting for is I would wait for this stochastic to turn around and move in an upward direction and move past this oversold line here right at the number 20. Now that means you will miss out on a few gains because you won't be catching it at the bottom, but chances are you wouldn't have caught it at the bottom anyway. So I would just wait for SPY to have some more green days, which will turn the stochastic in an upward direction. And that is the first data point that I look at. And when it comes to buying strategies, it's one of the most important ones as well. Then the second thing I look at are the Bollinger Bands. So you can see that the Bollinger Bands are up here. They are these black lines, but the Bollinger Band just aims to show you what range a stock price is expected to trade within. And it's typically very accurate. And you can see that the few times where the stock price does bounce out of the Bollinger Band, it pops right back in. Bounces out, pops right back in. Bounces out to the downward side here, pops right back in. But you can see as of right now, we are outside of the Bollinger Band at the bottom. So there is a very good chance that over the next several days that the stock price will bounce back inside of the Bollinger Band. Okay, so that is the second data point. And then the third data point is I want to know where my levels of support are. And the 200-day moving average is one of your strongest levels of support. And we can see that the 200-day moving average is this blue line here. And we can see that SPY is right at the 200-day moving average. And we can see that the last 2 days has kind of hit the 200-day moving average and bounced up. Yesterday it hit the 200-day moving average, bounced up, and now it's kind of testing it again. So we will see over the next few hours if it bounces off the 200-day moving average for the third day in a row. But those are the three technical indicators that I look at. Now let's head over to Thinkorswim and place a trade. But before we do that, if you know anybody that you think could benefit from learning from me, tell them to come join the Trade to Freedom community. Not only will they be able to see my exact trades when I enter them, but they'll also get my entire A to Z options framework via the Trade to Freedom course. And then lastly, they'll be within a community of other people that all have the exact same goals as them. And I have strategies ranging from 0 DTE for my day traders, all the way up to longer strategies for people that are much more busy and don't have time to look at their screen throughout the day. So if you know anybody, the link is in the description below. All right, so here we are in Thinkorswim and I have SPY pulled up. And the first thing we want to do is select our expiration date. Now, typically, it's always best to select the furthest out expiration date that there is. Okay, and by doing so, the price of the leap will be more expensive. However, it gives your trade more time to play out. So we'll scroll down and it looks like our last day is December 17th of 2027, which is 1,016 days from now. So we'll go ahead and select that. And now we'll scroll down even more. Now the call side is always on the left side, no matter what brokerage that you are using. And the next thing that we want to do is select our strike price. Now, to do this, I look at the delta. Now, I typically go with a delta of anywhere between 0.70 and 0.80. Now, by definition, the delta tells you how much an options premium will move per a $1 move in the underlying stock's price. All right, so if we went to a delta of 0.70 right here, that means that currently the options premium will move about 70 cents per every $1 move in SPY stock price. However, most successful traders that I know use the delta as looking at a probability of an event occurring. And so at the 0.70 delta, how I look at it as that I have about a 70% chance that SPY will still be above $515 by this expiration date. So the stock price is currently $571. So this is saying that I have a 70% chance of SPY being above 515 on December 17th of 2027. All right, but buying an in the money leap gives you the highest probability of profit. All right, now, of course, you can buy calls way out of the money down here. But to be honest, people that do that are just buying a lottery ticket. You want to give yourself the highest probability of profit. All right, so let's say I want to do this strike of $515. I'll just click on it and I already have it set to buy. And then over here, you can select how many contracts you want to use. And for the examples of this video, we'll just do one. And then you need to select the premium that you're going to pay, which is always somewhere between the bid and the ask price. So right here at the mid, it gives us $130.18. But remember, every contract is worth 100 shares. So you'll always, when you're buying, pay 100 times the amount you'll see. So this one contract will cost us about $13,000. But that's way cheaper than buying 100 shares of SPY, which would have cost us around $57,000. So you're literally paying about 25% of what it would have cost you just to buy the shares outright. All right, but once we're ready, you go ahead and send to place your order. Now, remember, I said I'm going to wait for that stochastic to move up before I start making a move on this trade. But at least you have this information now, so when that does happen, you go ahead and pull the trigger. All right, but if we scroll down and look at the profit and loss chart, we can kind of see where our money will be depending on where the price of SPY moves. All right, so we can see that the stock price is currently here. And as we go up, how much the contract is worth continues to go up. And as it continues to move up, we make more and more money. And theoretically, you have no limit on your upside because technically a stock could continue to go up forever. But you can see here what your profit would be around the time of expiration. Now, of course, this is a bullish trade, so you do want the stock price to go up in order to make more money. And if it doesn't, then you will lose money. All right, but the most you can lose is the amount that you paid for it to begin with. So if we go all the way down here, let's say that the stock price just drops, then that $13,000 that we paid is the most that we can lose. But that is if you were to hold the contract until expiration, all right? So you can always get out of the contract early if you don't feel that the trade is going your way. All right, but that is how I buy leaps. Now I know that right now feels like a bad time to be talking about buying leaps because our human brain is wired to always think that what has been happening recently will continue to happen. So while the stock market has gone up for the last 2 years, our brains were wired to think that that is going to continue to go on. And now that we are having red days, our human brain is wired to think that that is going to continue to go on. However, nothing lasts forever. And now you have some weapons in your arsenal that you can use when things start to turn around. All right, but God bless you. Thank you for watching the video. I hope you learned something. And again, if you know anybody that could benefit from joining the Trade to Freedom community, the link is in the description below. They'll get to see my exact trades when I enter them. They'll get my full options course from A to Z, and they'll be within a community of other traders that all have the exact same goal. But thanks for watching. Make sure you like the video. And until next time, peace.